Let's move on to Jindal Stainless. We have the Group CFO of the company, Anurag Mantri, who's joining in now to talk about the way forward for the business. The results for Jindal Stainless, the revenue growth was actually quite good. 22% growth is what they saw, but the operating profits went down almost about 17%. The net profits were down 19%. I think that's the reason why the stock in any case has been under a lot of pressure. Let's find out more from the management. Mr. Mantri, thanks a lot for joining in. Can you just start by telling us about the business itself? What is the way forward? Because on the revenue front, things have been looking fine. You had earlier stated that volumes in FY23 would be flattish versus FY22, and you guided for a 20% growth in FY24. Do you stick to this guidance, or do you think that because of the challenges, the weakening demand, perhaps you may not be able to meet that target? Mr. Mantri, I think you're on mute. If you can just unmute yourself.
So, can you hear me now?
Yes, go ahead.
See, the last quarter, if you see, the major impact was on the two fronts. One way on the Indian stainless steel industry in domestic market, there were a flurry of imports because there was an import duty which was there on the Chinese and Indonesian, which was removed. So there was almost 50% market was dominated by the import, and on the top of it, the government put an export duty on the Indian exporters. So that actually put our exports also under pressure. So that was the reason in the last quarter what we saw some of the performance parameters going down. Overall, I think hopefully these measures should actually be reinstated, and both the export duty should be removed and import duty on the Chinese import should again be reinstated, hopefully soon. I think what we are seeing as per the guidance, we will still try to be manage between our domestic volumes and some part of the export volumes. The guidance which we got was a flattish guidance for FY22. Probably, I think looking at the situation, the volumes may be down by 5 to 10% as compared to FY22 earlier. So we'll be just reducing by 5 to 10%. But otherwise, because since we operate into more higher end segment, and we'll continue to maintain those strategies. So that's what our volume guidance may be down by 5 to 10% expected in FY23 over FY22. On EBITDA per ton, I think it will remain under pressure, but I think last time what we guided, I think we are still hopeful that Q3 onwards, Q2 will remain under pressure, but Q3 onward the situation should improve further in when the destocking ends, and globally as well as in the domestic market, as well as on when we see the festivity demands coming up. Overall basis, I think we are still maintaining hopeful that 18,000 per ton of EBITDA per ton guidance we can still hold for FY23. And we will continue to review these as we go into further, and how the government keeps the measures on the various fronts.
All right, so you're reducing your volume guidance from flat to about -5 to 10%, and at the same time, EBITDA, you had earlier guided for a range of 18,000 to 20,000. You're believing that 18,000 is something that you can do this year, because in the first quarter for both JSL and JSL Hisar, you've done EBITDA per ton upwards of 22,000 per ton itself. But can you give us some further details on this acquisition of Jindal United Steel that you've done from the promoter entity at close to around 958 odd crores, 958 crores for 74% stake? What is the rationale? What are the margins on this asset that you've acquired? What are the synergies that you can realize?
Yeah, so this is a very critical asset for the integrated stainless steel operations. And if you see, typically our related party transaction, this is a hot strip mill, and they also have a cold roll mill with that. So there used to be a job work done, and always used to be a large related party transaction with this entity. And so it is very always from the shareholder perspective, it was very critical that that was the preferred route, that we cut down these type of transactions and bring this asset into the main entity itself. And so the 74% stake was being held by one of the OPGSTPL, so which JSL will be buying that stake. It's a very value accretive acquisition, because from day one it's it's a EBITDA earning entity, and from day one it will be adding up to the EBITDA on this front. And considering these, I think it would be very overall, I think very positive for Jindal Stainless. In our opinion, it will also cut down a lot of related party transaction with the promoters entities in the future, and also make a Jindal Stainless a completely integrated.
Can you elaborate on some numbers? You said it's an EBITDA making entity, so can you give us the margins that this business makes? And also at the same time, you said there were a lot of related party transactions. So net, what is the kind of benefit that will come to you given the cost that you're paying for it? How much will your EBITDA increase by? What is the margin that you pay? And what are the synergies you are expecting to realize?
Yeah, good. So I think if you see, JSL, we are doubling our capacity, which will be coming by the end of this fiscal year, this expansion. And if I take it, those numbers of then the tolling arrangement could have, and with the other cold roll revenue as well as other carbon steel revenue, that entity EBITDA is expected to be reached to almost 1,000 crore. So if you see within 2 years, that EBITDA is expected to be in the range of 800 to 1,000 crore. So what we are paying 958 crore is currently. So that's what the run rate, because this is a specific tolling arrangement. So it used to be a. So it's a very steady state of EBITDA which this entity makes in terms of the overall EBITDA margin.
Okay.
So addition in next 2 years will be on an annual basis. It will reach to 800 to 1,000 crore of run rate of EBITDA.
All right, Mr. Mantri, we're going to leave it on that note. We'll connect with you in probably some time to get more details with regards to all even the impending merger with JSHL as well as Jindal Stainless. Thanks very much for joining in and speaking with us. We need to take a short break, but up next we'll be speaking to Kiran Mazumdar Shaw.